to last year when we did not trade and do everything. So this year is going to be in two ways, right? So we're going to be trading the forex market, and we're going to be trading the synthetic market. So, but in the forex market, we're going to be trading the indices, while in the synthetic market, in the synthetic indices, while in the forex market, we're going to be trading pure indices. So we're going to trade something like US 30, NAS 100. So we are urging you guys, provide yourself with enough ability to be able to like benefit from this trade like everyone else, right? So if you look at it, there's a simple way in which I analyze my charts. I call it the smart range trading strategy. So in this trading strategy, okay, I'm admitting myself. Okay, good. Now let's look at NAS 100. Okay, it's coming up. It's coming up. Yeah, it's coming up nice. So in NAS 100, what you do most times, I tell most of my inner circle students, which is that you come down to the highest time frame. You go up straight up to the highest time frame. Who can tell me what do you think is going to be happening from this higher time frame in the next few months? Can anybody take a guess? Can anybody take a guess? Let's see. Let's see.
Maybe selling.
We're gonna be doing what? We're gonna be selling, right?
Yeah, I think so.
Okay, good. So which means that this is NAS 100 major. Something major has to come that is going to destroy the stock market for us to have this push down. I want you to understand that this is indices. This is not. This is indices. This is not. Your forex thing whereby you talk about currency, economy. This is you talking about stocks, talking about these complaints, and a major thing must happen, to influence this kind of retracement that we're expecting in the market. So that being said, you now look at what I tell you to look at your price. You see, one of the big mistakes that we've done in trading is that we've been sold concepts. We've been sold a lot of concepts whereby a lot of us don't even now understand the nitty gritty of trading anymore. When you come to this chart, everybody's looking at the chart. Say, I see this green candle, I see that yellow candle. Is that what the chart is all about? The green candle you're seeing, the yellow candle you're seeing, the red candle you're seeing, these are just price data. These are just historical price movement that the candlestick is just used to represent the price movement. So are you not going to ask yourself, what is actually the price, right? If something is used to store the historical price movement, should you ask yourself, what is the price movement? Or how does the price movement works, right? So I can come here and tell you, okay, this is mark of 2000. I can look at 2000, say, okay, fine, 2000, 20,000, sorry. I have a mark of 22,500 here, 22,500. You can see that. Oh, sorry, 22,500. You look at how I'm looking at this, okay. But I can come in majorly and just put out the major psychological level. You guys understand? Now, this major psychological level are like our key target to what we're expecting in the market. So you see, this is another key target somewhere here, 21. So let me just edit that. So you go to your chart, go down to the monthly time frame, put out a weekly key level, which is a psychological level, so that you can understand the price. Let's say you can understand where these movements and this volume are coming from and where they are going to. These guys are not there to just say because it does doji, because it does this. Think beyond that scope. Think beyond that scope. So you are able to see more logical what is really happening in the market. Now, if you look at this rejection, I can all tell you that this rejection comes from 26,000. Are you seeing that? Do you guess that? Do you get that? Do you notice that? Yes. You notice this from 26,000. That's a good scope from it. You can look, I can just come back here and tell you, okay, if I look at where this all happened, I don't know if this is about 17,000. This all happened from 17,000. From 17,000, it pumped to 22,000. From 17,000 again, it pumped back to 22,000. You can see it from 22,000, it retraced to 17,000. If you took a retracement from 22,000, it's looking to go back to what, 17,000. It's as simple as that. But what are now the factors that would influence this to do that? That is exactly what you are doing in this market. It's not you cramming this and just keeping it simple. See, all the complex things I'm telling you today, majorities of the traders you are seeing out there, they are putting you through trading, and they are saying, oh, the retail way is wrong, this and that. I told you, I can tell you, and I can attest to you that they failed trading retail. They failed trading retail, and they thought they were too smart. So they all went for smart money concepts, saying it's buying liquidity and doing this and doing that. It does all those bullshit. 2017, 2016, 2019, 2020. There was nothing like that. And people were trading and making crazy money. So where did that come from now? Advancement, AI? I don't think so. So look at that now. When you go, we step down. We're stepping down now. I'm not. I'm telling you guys to understand this. I'm not looking at price action on the higher time frame because it is too big of a time frame to for me to now be looking for market structure. IK is with me, God's will is with me, Idris is with me, Kodri is with me, Samson is with me, Okoyemi is with me. I want you guys to engage with me. It's too big of a time frame. It's too big of a time frame to be doing that off of. Look at this. This is beautiful. We retraced off 24K and went straight to what? 25K. Clean. Retraced off 23K, went straight to 24K, came back to 23K, went straight to 24K. Clean. Now, I will now ask you what is now the structure, what is the price structure within this range. That is when you are stepping down to what? A lower time frame. Now look at the weekly time frame. I've seen, what do I need? Every week, this is a new month. That's why I started from the month. But I'm going to make you understand that every week that you come into the market, you should check your weekly time frame and see how the weekly closed. Is that understood? Guys, do you understand that? I want
Yes,
you
boss.
to
Yes.
understand that.
Yeah.
Yes, boss. Yes,
Every
boss.
week you come into the market, make sure you go to the weekly time frame to see how it closed off the weekly time frame. You see, this is one of the issues why majority of these traders, you see them, they'll be ranting and abusing this guy. What is his name? That one too. He likes problem. They call him Dapo Willis. You know, how many of us know Dapo Willis?
I do.
Yeah, that's what they
Yeah,
used
I
to
do.
abuse
I
him.
do. I
That's
do.
what they used to abuse him majority of the time. He does not used to hear what. He has a good concept, making them understand that you see, price, the way market works is that price works in ranges. So there was a student of mine that was creating an app on trading, and I told him, I said, if you create this app, it is good, but you need to understand that you have to put what is called an average daily range of every currency pair. Now, every currency pair or every pair you trade in the world has an average it can do on a daily basis, on a weekly basis. They have the amount they can do. Do you know that? I know majority of my inner circle students are here and they know that. So when you come to the market, yeah, when you come to the market today, and the market has the ability to give you 100 pips every day, and you're coming during New York session and you've seen that the market has done about 60 pips already that day, are you supposed to trade that day?
No, sir.
It makes no sense. You can see that. That is why many traders lose. They now start forcing that trade to give them that amount. Instead of forcing it to them when it has done 60, just wait for it to reverse. You have high chances of winning that reversal trade than the continuation. These people know. I will share you something in the group where you can see terminals from um, the Bloomberg trading floor. Each traders and all softwares that they have there is costing them about $30,000. It's costing them about $30,000. That's how crazy it is. To just have setups that show them reports. They know the amount of people that are buying, the amount of people that are selling. See that kind of information. If we have that kind of information, we're going to be making crazy money. When I know in this market they are buying too much, I don't want to buy. Okay, guys. So let's see. So after having this target area, we all can see it clearly now from the daily time frame, right?
Yes.
Now, even if you desire that this market is to go down from what you saw on the monthly, that is going to be going down, it still needs to come back to 25K. Yes or no?
Yes. Yes.
If it breaks it, it goes where next? 24K.
24. 24.
If it does not break it, it goes back to what?
Go back to 25.
It has to do one of the two. Is it not?
Yes, yes.
Then why are you not winning as a trader? When you know, okay, this guy no sell, this guy gas buy. Is it not? Is it buying and selling now? It's too odd. Bet on the buy and bet on the sell. You win one. It's not that simple. We are the one forcing it. We are the one doing too much.
Actually.
You can sit here and say, okay, if it comes here, I'll buy. If it comes down here, I'll sell. It's as simple as that. This is what these guys are doing. If, regardless of all this fluctuation you are seeing, they might have bought from here and they'll just be holding it to get or we're expecting to push further. Now, when this happened, there is a sign here to sell. They'll sell from here and they'll sell it back to this. You see, they're exhausted. That means they took out their profits. When price came back here, it retested this, and what happened? It fall down again. Can you see that? That is beautiful. So the first thing I want you to understand in the smart range strategy that I'm trying to teach you now is that I want you to first trap price in a range. That is how you can win. Don't go to your chart. Look at this. This is beautiful. Now let me hide it. What are you seeing? Can you see that information anymore, guys?
No.
This is how they focus up. They tell us, clean chart, have a clean chart. Don't make it messy, have a clean chart. When you have a clean chart, you see well. You see this, it's all a lie. They were the ones selling that narrative. Because when you have a clean chart, your subconscious does not tell you where price is. Okay, look at this. With this you are seeing on your chart, do you know where price is?
No, actually.
Samson, look at
You
this.
check.
Look at this too. Samson, Augustine, I want you to look at this. Look it clearly now. Can you
I
tell
can.
me, do you know where your price is? Do you even know it's at 26K, it's going to 25K? Do you know that?
No, no, boss.
Bro, that is what they want you to, they don't want you to know the price. Can you see them? On every asset you trade, it has a value. Get the price. You cannot buy something in the market and not know the price of what you are buying. Is it possible?
It's not possible.
But all of us are coming to trading and buying and selling and don't know the price you are buying and selling from. You see, they sold us rubbish. They sold us rubbish concepts. That's what I'm telling you. Now let me put out that back. See how beautiful it is. See how beautiful it is. You know how crazy it is? You can take both corrections and continuations and corrections in this range. Price cannot run more than this range. So when I say this and I want to trade, I come in on a daily basis. I look the daily time frame. When you come in on your chart on a daily basis, kindly look at the what? Daily time frame before stepping down to the 4 hours time frame, because the 4 hours time frame is our main time frame, right? But we just need to get a clearer view from the daily. So now look at it. So the main time frame is where I'm going to be drawing my major support and resistance. That's where I'm going to be drawing it from. Get that, guys. Get that. It's very simple. Now look at this market. Let me go back to December. Okay, January is done. So let's use January as a good example. Let's use January as a good example. Okay, this is January. Can you see that's the whole of January? I'm going to use the whole of January as an example for every one of us. Now let's look at this clearly and closely. What do you notice? In what price range was January trading in?
I'm not seeing your screen again.
For you? Can you see my screen now?
Seeing it now.
Is the network on your end?
Yeah. Okay.
So guys, can you see what price was January trading in? See the whole of January.
Price was trading from 25 to 26.
Thank you. The whole of January. Now, do you want me to start boxing them so that you can see in December too? How about December? How about November? How about October? How about September? Let's go to September. Okay, now let's talk, guys. Let's talk. September, let's go to a real example. Price was trading in from comment. See, September, price was trading from 23 to what? 25. Yes or no? In October, price traded
Yeah.
within 24 to what? 26. In the November, it traded from 26 back to 24. You know what is funny about it? Where they bought from in November, in October, was where they sold back in November. Is that not? Is that not? I don't know. It can never get simpler than this, guys. I don't know if you are seeing the magic I'm creating. I didn't hear you though. I know you said something.
Yeah, I can see it.
This is what we do first before coming down to market structure. I don't want you
Yes,
guys
I
to.
can see it. I can
Okay,
see it.
okay, good. I don't want you guys to convince that you're not going to do market structure. You're going to do it. But I'm making you understand the key. How do we say it? The foundation, the basics. Yes, the basics. Understanding the basics. Now look at this. In this market, I come back to the 4 hours and I start to look at structure. Makes sense. Okay, this month, what happened? Look, coming into this month in this range, this month was not there before. So in this range, we had prices. We had prices. Somewhere like this area was a nice area. Somewhere like this area was a nice area. Somewhere like this guy was a nice guy. This guy was a nice guy. This guy was a nice area. This guy was a nice area. You see, now you see what I'm doing? I'm plotting out my what? Support and what? Resistance within that range. So we had this guy. Look at it, guys. We had this guy. I'm coming. I don't want to use the same. I don't want to use the same line, and I don't want it to stretch to. I don't want it to stretch to the left. I want it to go just only the right. Okay. 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 It's crazy that whatever I've drawn in this zone is what I'm going to use to trade the whole of November. You don't believe me? Say it. You think they don't know these prices you are playing? These guys don't trade anymore like the manual way they trade those days. So the computer still has the information of where it took order from last month. You don't need to tell them. They know the computer knows where it did order and where it is going to. So this is that and this is this. Is that beautiful now? Is that beautiful now, guys? I want to hear from you guys. You can see, oh man, this is wow, 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 wow. So I have this guy here too that started before. Don't leave out any information, right? Don't leave out any information. Don't worry, it is quarter. Yes, I know. it looks very dirty, you know. No, bro, how are you going to be able to trade this? I'll trade it, don't worry. So now look at this. So I'm looking at market structure. I noticed that the market had a push down here and we had this lower high, right? Are you with me, guys? And we had this lower low. Am I right? Then what happened? We had an higher high and we had an higher low. Then the market continue on this page. That's a good one. Victor, Victor, where have you been? Bro, you just go hide yourself. They make your money alone.
My
Eh?
chief, I don't hide myself. Oh, I don't hide myself.
Ah, it's been long, bro. So
You don't see. I just went on break from trading. I just want to come back. I just went to just watch videos. I've watched. I still have your first video when we are doing when you did change of character um the first class you taught, the first class you did on Google Meet.
yes,
It was three of us, me, you, and one other guy. I've been watching that video over and over and over and over the questions that I asked. So I just took out this whole time to just rewatch, relearn, understand a whole lot of things.
yeah, that's good. That's good. So it's nice to have you back. Okay, so guys, look at now, guys. We're clearly looking at it together. So that's where we have our last structure. So from here now, I pull out my fib to push it here, expecting that price comes to one of the Fibonacci level, which is the 61.8 or 78.6, before I'm looking to take a buy. Now, can you see this now? I want to ask you, if I'm having a setup on the 4 hours time frame, what time frame am I going to break that chart down in order to get an entry? I'm looking at who is
That
going
should
to
be
get.
15.
I'm looking at who is going to get this. Idris.
That should be 15, I guess.
Okay,
15, 15.
15. Okay, I'm seeing that. I'm seeing that. Okay, what? Who again? Who again?
What about we try 5?
Okay, good. That's what I'm telling you. You're going to see the people have trained and the people have not. This is going to differentiate the people have trained and the people have not. Actually, with the people I've trained too, I'm not going to step down to the 15 minutes time frame here. I'm either going to use the 30 or the 15. You're, you're not going to use the 5 minutes. Once you use the 5 minutes, it's going to throw you off. You're going to start to see noise and it's going to throw you off that setup. You're actually going to get your entry, but you were supposed to come from the 30 minutes to now use that 5 minutes to get a 30 minutes entry that is aligning with the 4 hours. I hope you get that. That is sniper entry. So, but I'm going to use the 30 or the 15 minutes. But I'm going to start from the 30 first. If I do not understand what is happening on the 30, then I step down to the 15 minutes to break it, to see more information or see more detail about that particular time. So, guys, note that. So, looking at this, you see, the market, came into this level. A good example of before this level existed, that's what I want you guys to understand. Before this level existed, there was a level in within. You can change it to a line just to pick your levels. You can change to a line chart. I teach my students on how to use line chart. So this is okay. Let me go back. So that because of people that are around and people that it has been long till we took a trade here. So now if you see something like this on your market, let's see. Something like this, like this, like this, like this, like this. This is how a line chart looks like, right? This is how a line chart looks like. So I like to call this the roof. I like to call this the roof. This is a roof. And this is a what? A floor. What do I say? This is a what? Roof. And this is a what?
Row,
Floor. Right? So whenever
floor.
you see curves like this, it is a roof. When you see curves like this, it is a floor. Right? Right, guys? Sorry, I'm trying to type inside the group. Okay, so are you guys getting it now? This is it. That's why I like to call it. I make sure I want to teach my method of teaching like I'm teaching secondary school students, right? So I tell people, I said, if I'm a trader and I'm a good trader and I'm a good educator, and I cannot train you like a secondary school student to get what I'm teaching, then I'm not good. So you can see this. This is the roof. Roof are always resistance. This is the floor. They always support. Roof, floor, right? So when you change to a line chart, I'm expecting that you look for your roofs and your what? Floors, right? So what is this now? A good example. What is this? What's that, guys? What is that, guys?
That a floor.
Yeah, that's a floor.
Floor.
This is a what? This is a roof. This is a floor.
Floor.
This is a roof.
Roof.
That's a roof.
It's just simple. You look at where you are seated currently in your room, in your house, in the balcony, in your place of work. Just look at the floor. You can see the floor. Look at the up. You can see the roof. Is it not?
Yes.
So that's how we keep trading as simple as possible in our own academy here. No be by grammar. If you be primary school student, we will teach you. So this is a good, you see that was a good area. So I can change back to a line chart. So I don't want to use this area yet. I want to show you something before using that area. So I was talking about how you could get a continuation, how you could get a correction trade and a continuation trade. So look at this. Now when the market was retracing, you can also get a what? A sell at the point when it was retracing. Look at this market. So it pushed up here and we're expecting that this price is going to come to what? 61.8 or 78.6. Right now, look at this old beautiful cell. This took 4 hours. I understand this is going to be a push and this is going to be a correction phase. So this is a correction phase, yes or no? This leg is a correction phase. So you must know how to trade corrections and you must know how to trade what? Continuation. So look at this correction phase. What do? I will step down to what time frame? What time frame?
15 or 30.
Either 30 or 15, yeah. But which one first?
30
30.
first.
30.
Now look at this. I want to show you something. I'm not going to on my session because if I'm going to be trading this session, you guys are going to trade it, you guys are going to be benefiting trading live with us in the academy this year, right? And you're going to see that we're going to be trading majority of the time during New York session. It's going to be around 1 or roughly around 2 p.m. till around 5. So you are going to see it first hand, but it's going to be just one day because me and the traders club are going to be trading every day. So days where we're going to see setups, days where we're not going to see setups. So if you have the opportunity that you would like to, join that inner club or that life club, it means that you have to come to get a proper mentorship. You have to be taught how we trade first properly. Then that way you can join the community, the traders club, where you are going to now be able to benefit better from what we have in place for you. So that way you'll be jumping on live calls, you'll be asking live questions, you're going to be seeing live examples of how we trade. There was a time, God's will misses me for that. There was a time in, I think that was 2023, Abby. God's will, was it 2023 or 2024? Sorry, I can't hear you, sorry. So we used to trade together then, together. I taught him how to go. Okay, I taught him how to go a $10 account. We go $10 account to 8,000. It was crazy then. It was crazy then. But it's all beautiful. It's all beautiful. So now let's look at this, guys. Now, if you look at this and I on out the session, New York session is only when I trade. So you can see this. So coming into this session now, you see the market pushed out, went back into the session, rejected. So I knew the correction has started from This is in Asian session, and they pushed the market. So pushing the market down during Asian session. Then we had this retest, and this was the first stop. Market pushed down, went up again, and he rejected, right? So I thought it was news or something around this period, and this was a nice sell off from that area. So if I'm selling from this area now, right, I can actually sell from here. So I can actually, yeah, early 2024, okay. So I can actually sell from here, looking at this. From this time frame now, I can break this whole area down into the 5 minutes. That's what I was telling you guys. You can see that. So I cannot do the 5 minutes anymore from here, but if you want this nitty gritty, you know where to catch me. So I can break this guy down to the 5 minutes and get an entry from here, because IK knows if I pull out a fib from this point here on the 5 minutes to this point here on the 5 minutes, I'm going to get a 78.6 or 61.8 entry, right? IK. IK, you know one talk. Talk. You need to talk. Because some people are going to come back to watch these videos, and I want them to also be able to align to what we've discussed. You can see. So I'm going to let me teach you. Let me just teach you guys, just to give you free nuggets to take home today.
Yes.
So I'm going to,
Yes. Since my mic is bad.
is that? Okay. Yeah, since your mic is bad. Okay, now see. So 61.8, I'm going to have a pending order on it, and I'm going to have a pending order on 78.6 during that session. So I'm going to wait for the market to come into the order of 61.8, and then my stop loss is going to be at 78.6. And I'm going to wait for the order of 78.6 to come, and my stop loss is going to be at 100. So if the market clears out both of these trades, if I was trading a prop firm, so from here now, I can target this market and target it from this area either to 61.8, 38.2. This is a good entry area for me, right? Look at that. I'm going to show you something. I'm coming, guys. So I'm looking to adjust this better. And I'm going to have another entry at 78.6, yes, 24, and I'm going to target that same 38.2. Let me just put that. That's the first PRZ level. Now, look at this trade. I'm going to risk on my prop firm. I'm going to do a 0.5. I have my goal on a daily basis is to take 1% risks. Are you with me, guys? So I'm going to spread the 1% risks across the two trades. So I'm going to risk what? 0.5, 0.5 on both pending orders. Are you guys with me? So on both pending orders, I'm going to risk 0.5, 0.5. So if I risk 0.5 on this, I'll risk 0.5 on the other one. So in total, if I'm going to lose both trades, I'm going to lose what?
1%.
Thank you. Now look at this. This first trade did not trigger the second entry. It triggered only the first entry. So if I had a $10 account, if you have a $10 account and you wanted to take this trade, how are you going to risk it? I want somebody to break that down for me. Nobody can help out. A $10 risk, and I want to take this trade, and I want to take these two, put out these two pending orders. How am I going to share the risks?
That would be 5 on the two
Yeah,
trades.
that will be 50
$5.
$5 on each trade. Thank you very much. I like that. So look at this first trade right here. This one before this one. Yeah, so looking at this trade, this closed after Asian session. Lucky us. So looking at this 61.8, this went, and I would have made 5.3 risk to reward. If I was even risking 1%, I would have made 5%. On the other one, I would have made also roughly about 5% also. Now, which means that if I risk 0.5, I will make 2.5%. Does that make sense to you guys? I don't know if you guys get me, but I'm going to do the breakdown here. So account, breakdown. So you were opportune to purchase. So I'm going to share you a link of mine very soon. Is with Alpha Capital UK. So you're able to get 10K account for just $40. So you can trade that. So let's use the $40 prop firm as an example. Risking 1% on this prop firm means that you're going to be risking what? $100. Right? And I said, okay, fine. Now let's share the risks, right? 0.5%. over 0.5%, right? So which means that is roughly about $50 per each trade, right? I say 50 naira, $50 per each trade that you take. So one of these trades was triggered, the other one was not. So 0.5, the one for 0.5, we were able to make 2.5%, right? With a risk to reward of 1 is to what? 5 RR, right? So which means that in total we were able to make $250, $250 with our risks is being covered for. So this was our profit. That was our win. You see that? So if I was trading a 100K account, I would have roughly made $2,500. It's crazy, right? Because we're going to do the same thing. What the 10K person did is what the 50K person is doing. Now look, this person made $250. I want you
Yeah.
guys to see this.
Yeah.
I don't know why. I know at a point in time, I've also worked the job before, right? So I've also worked the job before, and I'm also working a job, but it's just that the job I'm working on is self-employed. I'm employing myself. It's my own business. So now, what salary is going to pay you $250 a month? You know how much that is? That's 250 times